welcome to this week's webinar with me, David Jones, and AUDUSD Markets. This is a webinar that we do every Wednesday at 12:30, and there are a couple of bits to this. First of all, we talk about different parts of trading strategy each week, and this week I think we're going to focus on what is probably one of the more important topics, and that's about where to set stop losses. So we'll spend a bit of time talking about that, and we'll also have a look at maybe some opportunities in the next couple of days, and also what's been happening over the last couple of days. Clearly we've seen a big move this week in the pound on yesterday's shock announcement from the UK Prime Minister Theresa May that we're going to have a general election at the beginning of June. So the pound liked that and pushed out to its best level since October. So we'll have a look at the pound. But there's some interesting things as well, I think, on this topic of stop losses that we're going to start talking about in a second. There are maybe some interesting trades over the next, I think, couple of days in FX and potentially in stock indices that could be a good sort of risk reward from a trading point of view. So we'll spend a bit of time looking at that. Did I say what the date was? I said it's 19th of April. If you're watching the recording, that's when this one was held. So this webinar runs every Wednesday at 12:30 for about half an hour. But I think the risk warning has been up there for long enough now. So let's just take a quick look at the pound first of all. So what I'm using, this is AUDUSD's Trade Hub trading platform, and hopefully you can see that if we zoom in, there we go. The size of the move, that was, you can see that the candle from yesterday took pound against the dollar from just below 126 to above 128. And it's quite a monumental break. This, I think it's going to be interesting how it performs the next couple of days, because we had that flash crash, that weird flash crash back in October last year for pound against the dollar, where it absolutely plummeted in the early hours of the morning, for reasons that still aren't that clear. I think there was, some odd orders in. It was thin trading, usual stuff, but not completely explained, I don't think. And we'd seen, a rally off the back of that up towards the 127.75 area, then weakens back to 120. Then in Feb this year, another rally that ran out of steam just above 127. So this whole 127, 128 area had been a major barrier for pound against the dollar. So the fact it's broken it yesterday, and if let's forget for now for a second about the election stuff, that a breakthrough a level like this would normally suggest a significant change in sentiment. So I think it's going to be really interesting to see if it can hold above here, and if we get a sell-off, which I think we will. It's pretty overextended. I think I put on Twitter this morning, if you look at the RSI, this is the most overbought on a 10-day RSI, which is the thing that I like. This is the most overbought pound against the dollar has been. We've got to go back to the summer of 2015. So we're up here now on the RSI, and you can see we only crossed this level back in June 2015, when it was clearly a lot higher than what it is now. So it is overextended, but as we know, markets can stay overextended for quite some time. But I think it's an interesting one. I think it's going to be really interesting if it does start, when it starts to sell off, wherever it starts to sell off from. Where does it turn around? Do we see people, this is an hourly view now, do we see people keen to jump in and buy? So let's see what happens. I think the obvious levels to watch, it's a long way away. It's only yesterday's low, but back towards 125, 125.20. But the break does suggest a change in sentiment. It's early days. We're only one day after the break, but let's see what happens. Assuming this is a valid break, that the next logical levels are going to be the post-EU referendum highs. Where it absolutely got clobbered, of course, on June the 23rd, and then rallied and really couldn't get through the 134, 135 area. So I think that's the next logical level. But I do think, I think I said at the beginning of the year, for me, gold and the pounds are maybe the markets to watch this year as ones that had been maybe clobbered a little bit too much in the second half of 2016. So I think it's really interesting, this break, but let's see how it performs. over the next few days, but a really interesting one to watch. Let's talk a bit about strategy before we start looking at the markets. I'm going to talk about stop losses for about 5 minutes, and I think that everyone should set stop losses. I think if people trade without stop losses, it's like trying to cross the M25 with your head in a bucket. You might get lucky and get to the other side, but it's not really a sensible strategy for crossing the road. You need to have something in place that takes you out if your view ends up being wrong. And the problem, of course, many people have when it comes to trading is admitting they're wrong. But I think if you put a trade on, you should have a level, you should have a stop with your broker where, okay, if the market hits that level, bang, I'm out, I was wrong, and I move on to something else. So I think people who trade without stop losses, I don't think it's a very sensible way of trading at all. Then I think the second mistake that plenty of us make is setting stop losses far too tight. So let me just try and do my squiggles here. Hold on a second. Let's see if this is going to work. Let me see if I do my wonderful artistic stuff. Here, let's bring that up. Let's delete that. Clearly, if a market, when it comes to setting stops, I think the mistake that plenty of us make is we set them too tight. So let's say a market has done something like that, and let's say that's 1 day. So let's pretend that was, what day is it today? Wednesday. So let's pretend that's Monday's trade in a market. Then we see the market start to do that. I think the temptation for plenty of us, me included, is to think, well, this is a market that's reversing. I want to buy in. I'm going to get in here because I think this is a market that's going to go higher. And I think plenty of us will then place what is in effect a monetary stop. So let's say we buy £10 a point. Let's talk about it from a spread betting point of view. And we only want to risk losing, I don't know, 200 quid. And this level is 20 points away. So we decide to set our stop loss down here. So that's like just on an intraday level. And that's fine if the market takes off, but I'm sure, as plenty of us know, just because we've decided to place a trade doesn't necessarily mean the market is going to go in our favor straight away. I think one of the things that I've learned over the years, for markets at least, is to be patient, to give the market time to prove you right. Because the problem is, this sort of thing can happen. You get stopped out, which is very frustrating, and then you see the market go on exactly where you thought it was going to go. So for me, one of my rules, which I do break now and again for setting stop losses, is if I want to buy something like this, don't pick a level from today. So at the very least, I want my stop loss, in this example, if I'm a buyer, below the low of the previous day. And we'll look at some examples in a minute that do bear this out. I think plenty of my trades have gone wrong when I've done really short-term trades, and what I'm trying to do effectively is pick the high or low for the day and place my stop loss beyond that. Whereas if you're setting your stop loss below an extreme of the previous day, if you're a short-term trader, the previous week, previous month, if you're a medium-term trader or an investor, you're giving the market time to prove you right, and you're not just getting taken out in the sort of the day-to-day squiggles, the day-to-day noise of the market. And something I do, I'm very particular about putting notes in a spreadsheet when I place a trade. Where did I get in? What was the reason for the trade? How much? Where's my risk? All that sort of stuff. But there's also a column for saying how long ago was the level set that I put my stop loss beyond. And ideally, in most cases, I want it below the extreme of at least the previous day, because the market has given us a line in the sand. And the same applies, of course, if we're looking to sell short. If a market has done that, rallied up to a point on one day, and let's say that's 1 day, the next day it does something like that. That sort of setup for me, that's the perfect setup. If I'm selling there, then I've got a logical place to set my stop, and it's above the high of the previous day, rather than maybe selling down here and setting my stop loss there, which is almost a random level chosen by me. So I think a good guide to setting stop losses is not to get too caught up in the really short-term moves of a market, you know, on maybe a 2-minute, a 5-minute, or a 10-minute chart, you know, look at the extremes and say, well, if the market does break this level, then I'm probably wrong. I need to rethink my entry point. So I hope that makes sense. So let's take a look at it for real markets. So I had a quick look before I started this, and I picked a couple of markets that I think are interesting. Let's leave the pound at the moment, but let's look at the S&P, the S&P 500. I think it's a good example from yesterday, an opportunity yesterday. So let's flip over to a 10-minute chart. So for the short-term traders, let's take a look at this. Oh, former Chancellor George Osborne says he's standing down as an MP. Oh, maybe he'll have time to do some more jobs. Here's the S&P 500. April the 19th, this is where we are today. April the 18th, this was yesterday's trading, this was yesterday's low. If you were looking at the S&P yesterday, let's just take this out a little bit. Of course, it's always easier in hindsight to find these levels, but on Monday's trade in the S&P, and I think the US was open on Monday because they don't do Easter Monday, they were shut on Good Friday, but I think they were open on Monday. But on Monday's trade in the S&P, the market had a really weak Friday, so that's Friday's trade. And then sort of turned it around, and we saw quite a bit of strength yesterday, on Monday, and the market had a really strong day, almost went up all day. And I would say if we were looking at the S&P yesterday, then there's a really logical place to think about where we want our stop loss to go. So the in-hours low on the S&P, so the official sort of trading hours for the S&P, the low was set at 20 to 3 UK time, so that's within 20 minutes of the market opening, because of course it opens at 2:30 UK time, and the low was 23.31. So for me, if I was trading the S&P yesterday, I could have been tempted to be a buyer on these little sort of fiddly dips here. This is the official open for the S&P, 2:30 yesterday. Rallies up a bit, sells off, but look where it turned around. You know, it traded as low as 23.32.8. The low for the day was 23.31.38. So it came within what 1.5 S&P points of the previous day's low. And I think these sort of opportunities, these are, you know, low risk, because if we're getting in, I don't know, here-ish, you know, this took a good what 1, 2, 3, 4 good hour or so sort of to play out, where we could have been a buyer in here with a stop under the lows, and we've got a relatively low risk entry point. We've got a sensible place to set our stop loss rather than sticking our finger in the air, and that's it. You know, and the difficult thing is, I think, it's having the patience to wait for that sort of trade to set up, because I think it is too tempting, I think, for all of us if we're sitting there watching the screen to jump in, but it's picking the obvious point. So I suppose looking at today, applying the same sort of methodology today, if you wanted to go short the S&P today, again, we've got our obvious reference point. We've got the in hours, so the official high from yesterday during official trade was up there. So we've got 23.47 near enough, 23.46.88. So it'll be interesting to see how it opens today. You know, if we saw a little bit of weakness on the official open in a couple of hours' time, it could be an opportunity to sell short, because you've got an obvious place to set your stop loss. Maybe the more conservative ones would want to set it above the out of hours high up here, so above maybe the sort of 23.50 area. But the point is when it comes to setting stop loss, to set them at these extremes, you know, and you can see it from last week how the market, you know, will make a high, might come back and retest that high, and will fall away. So I think picking these big levels to set your stops on is a much better approach rather than trying to sort of pick them randomly during the day. So that's the S&P on a 10-minute chart. If you look at euro-dollar, euro-dollar has been an interesting one. If we look at it on an hourly chart, again, that has had quite the move the last couple of days. But euro-dollar, so this is an hourly going back to over the last month or so. So we'd had our trend. Oh, hang on, where is my line? Where is my line? Let's pick up our trend line. So we had our trend that had been chugging lower and looked something like that. And then last week, is that? Yeah, last week, beginning of last week, the market started breaking out of this trend line. So it broke out the trend line, and then we had this real surge. So the market moved higher still. So this, you know, these sort of moves here were suggesting that maybe, you know, euro dollar was starting to turn the corner. But as ever, I think that you don't necessarily have to chase the market as soon as it starts moving, and I think these sort of setups can be great opportunities, and we're going to look at some real ones in a minute for the next couple of days, because it's all well and good looking back in the past and saying we should have traded it here and made a lot of money, but it's much harder in real time. But I think when we see, you know, the market sell off and then again maybe stabilize, you know, we do have the beginnings of a trend there. You know, so if we were looking at the market sort of here-ish, we do have the beginnings of a trend. And again, it's this sort of setup where it moves to a level and maybe we see some strength coming in. For those of you who are a fan of trend lines, you know, you'd have thought, well, okay, this is a buying opportunity. I'm not necessarily the biggest fan of trend lines, although I'll plonk them on the chart. But we had an obvious level to set our stop if we thought this market was going to move higher. So this is in the early hours of April 17th. And we had this low from April the 12th, so 5 prior. We'd had the market had made a low and then moved off that level. So for me, if I was buying in here at 106.20, I'd want my stop loss below, at the very least, below this old low at 105.90. So I could have had, you know, a 40, 45, 50 point stop loss, something like that, and which is, you know, I think a reasonable stop loss for something like euro dollar. I'm waiting to see if the market moves higher. I mean, it did. It worked really well, but you know, there was no way of knowing it was going to start moving like that, but I think there was a logical place there for us to place our stop loss. So I think that's, you know, taking a step back now and again, I think can do ourselves a real favor in terms of not having trades where we're effectively placing random stop losses. And that does grind you down, you know. I think particularly if the market goes the way you thought it was going to go. I think if you have a series of trades where you're getting stopped out and you see the market go how you thought it was going to go, it's incredibly frustrating. So I think taking a step back and looking at these sort of big picture things can really help. But let's look at some examples, I think, of interesting markets to watch excuse me, in the next couple of days using this sort of methodology. Let's start off, and I think they're both from the other side of the world, but let's have a look first of all. This is Aussie dollar, US dollar. So just to remind ourselves where we are in the big picture for Aussie dollar, US dollar. So we've seen a big run from December through to Feb. The market's stalled a little bit. It's all got a little bit messy, but you know, we've got pockets of support from sort of 74.50 through to the 7,500 area. So for me, I'd be sort of thinking, well, maybe we're going to get another push up for the Aussie dollar up to the sort of 7,700 mark. So now it's all about, well, where do I want to buy in, and where's my stop loss going to go? So let's take a look on an hourly chart. So for me, it's pretty similar to that euro dollar thing that we were looking at, and sort of a few steps back at the moment. But if we were going to draw our trend line, you could take the view, well, okay, the market has had its downtrend, which did a really good job of sort of capping any rallies, but that changed. You know, that has changed April the 12th. I think this is all off the back, I think, or helped along by Donald Trump saying the dollar is maybe a bit too strong. So I think we saw plenty of strength in other currencies against the dollar. So we saw this surge from 74.80 up to 76.10, so a 130-point move for the Aussie dollar, US dollar. The market's cooled off a bit over the last few days. But again, for me, I'd be thinking, well, if I think this is the break of that downtrend and the market is going to do this at some point and go back up towards 7,700, the question for me is, well, where do I place my stop? And at the moment, looking at this chart, I would probably want it still below here, below that extreme for the low. You know, I think that's a really logical place to place my stop loss down there. So 74.70. I suggest that at the moment it still looks a bit weak. You know, it's still, you could argue the little correction that's been in place is still chugging away. So for now, I wouldn't necessarily be in any hurry to buy the Aussie dollar, but it would definitely be one that I'd check on the hourly chart over the next couple of days to see how this pans out. You know, the perfect setup is we get it drifts off to here a bit, 74.90, and then bang, breaks out this downtrend. We can buy in somewhere down here with a stop loss the other side of that low. So I think that's potentially an interesting trade, setting up with a logical place to place our stop loss. The argument for the market to recover from here, you know, goes back to this downtrend breaking So let's see what happens. But I think Aussie dollar is an interesting one based on that stop approach. The other one is New Zealand dollar, US dollar. So let's take a look at that. So there's our dailies. Is it dailies? No, that's hourly. Sorry, it's an hourly chart. So on New Zealand dollar, US dollar, we've seen again this similar sharp move. New Zealand dollar strength, US dollar weakness last week, and it hasn't sold off like the Aussie dollar we were just looking at, and the market has continued to push its way higher. So for me, you know, it was only April the 19th. What's that? Is that today? It was only today. So it was only this morning, early hours of this morning, that the New Zealand dollar, US dollar made a new high for the move, for this sort of rally that started back here. So for me, you know, there's an argument, I suppose, for being a buyer now, you know, and the place I would want my stop loss, again, looking for obvious areas, not looking to place it below today's low that's been made in the last couple of hours, but looking to place it beyond some previous extremes. So back here at the 7,000 level, I'd say is one good area, and then we've got another level of, again, a bit lower down from back here, around 69.90. So for me, we've got that band of support. So if I was a buyer of the New Zealand dollar now, 7,017, we've got, I think, an argument for buying it with the stop loss below here. And if it breaks that level, then we're out and we'll see what happens next. But I'd suggest, because it's made fresh highs in the early hours of the morning, that strength still appears to be out there. So I think it's just about, you know, none of this stuff is rocket science, is it? Trading, it's just buying and selling, getting out when you're wrong and getting out when you made a profit. But I think just taking maybe a step back and looking at just a slightly higher time frame can filter out a lot of 50-50 trades and stop the frustration of being in trades and being stopped out only to see the market go the way you thought it was going to go in the first place. So there's a couple to watch, I think, Aussie dollar and New Zealand dollar. Let's take a quick look at our markets. Let's do stock markets first. We've seen a big move because you know, we've I think got used to this since the EU referendum vote last year, that the FTSE tends to move inverse to the pound. You know, so we've seen a lot of pound strength in the last 24 hours, and correspondingly a lot of FTSE weakness, and that is, of course, one of the main drivers behind that is because so many FTSE 100 companies report their profits in a currency other than the pound. So a weak pound helps boost their profits. A stronger pound can make their profits look smaller. So we've seen the FTSE clobbered. But once again, you know, there's an argument for being a buyer. Maybe not a buyer today, but maybe a buyer tomorrow, because we've got, I'd suggest, our logical stop level. You know, when the market, we had that incredible run beginning of the year, where I think we had 13 days or something where it was setting fresh all-time highs day in, day out. The market sold off back to about the 70-90 level. Then off we go again, 350-point rally, pardon me, up to 74.30, 74.40-ish, and the market's come off. And again, you know, looking at the old support, if we saw a bit of stability creep in over the next couple of days, I'd say there's an argument for being a buyer with a stop loss the other side of those lows. Let's see what the hourlies look like on the FTSE. Let's see. There we go. So we've made a low early hours this morning in out-of-hour trade. A bit of a scrappy day so far. But the RSI, understandably, very oversold down here. But I think the FTSE is clearly an interesting one to watch based off that 70-90 level. Other stock markets, US stock markets are, I don't know, they are pretty choppy and maybe a bit uneventful. This is the S&P that we're looking at. I think we do have, over the last 2 or 3 weeks, pretty directionless US markets. We've got S&P support around about 2320 and 2380 on the upsides. The market just can't get through, so we just have fairly choppy markets. So I suppose it's difficult to see a major move on the FTSE back up to those highs unless US markets sort it out and start to rally, and we do have them sort of trapped in something of a sideways range at the moment. Something that has been moving is the price of gold, and like pound against the dollar, we've seen, we had it last week, something of a a pretty major break in the price of gold. I think once again it was when the US did their military action last week against Syria. Was it last week or the week before? Anyway, we did see the price of gold spike out. This is a daily candlestick that we're looking at here. The price of gold spike out to fresh highs for the year and the best levels since November last year. But it didn't really hang on to it. You can see the market, you can see the candle here, opens here, trades higher, but closes not a million miles away from where it opened. But we have seen last week it pushed back up to here and pushed through. And again, from a chart point of view, this is a breakout. This does suggest that we're seeing perhaps the start of the next leg higher in the price of gold. So our trend looks something like that from December last year. We've seen it cool off the last few days. So once again, for me, looking at the chart, I'd be thinking, okay, I want to be a buyer. Where does my stop loss go? And I'd suggest if you really wanted to buy gold today, then the logical place for your stop loss, that the tightest I would want it, is below the low of yesterday. So there we go. So that was yesterday's low at 2 o'clock in the afternoon yesterday, around about 12.78. So I think it'd be interesting. It's trading at what, 12.81, 12.82 now. It'd be interesting to see how it performs this afternoon. But I'd say that's the first level to watch. And then we have, all these other, pockets of support left. Maybe the more sensible place for a stop is the other side of 12.72, the lows from April the 12th, so just over a week ago. Either way, I think we've got this band from 12.71 to 12.79 that could be potential support for the price of gold. So I think that's an interesting market to watch. So I'd suggest that the markets to watch in the next few days: gold, because we've had this breakout; FTSE 100, because it has been clobbered so much and it's brought it back to what has been, something of a major level from early Feb, where the market really turned around. And the other two, based on what we're talking about when we're talking about the stop, there's the Aussie dollar, because it's broken out of that trend, and New Zealand dollar, US dollar, which I can't find, because it's remained so strong and has held above that support. So I think there's a couple of things to watch. Of course, this weekend we do have the first rounds of the French presidential election, and I think the polls towards the end of last week, we're suggesting it's maybe a bit of a four-horse race. I think they are clear favourites, but as we've learned, I think, from polls running up to elections in the past, they can be wrong. So we do have the first round on Sunday of the French presidential election. So I think we could see, when currency markets open in Asia at about 9-10 o'clock on Sunday night, we could see a fair bit of volatility. But based on so the euro is an obvious one to watch. The French stock market, the CAC 40 is one to watch as well. But I think based on what we're seeing happening in the euro at the moment, I'd view any weakness, maybe 100 points below from where we are now, as a buying opportunity. So there's plenty to keep our eye on. And of course, there's the pound, to see how it fares after breaking through this 128 barrier yesterday. Can it manage to hang on to these sort of levels? So I think there's lots to keep an eye on in the days ahead. But once again, it's been proved that the political considerations are having a much bigger impact on markets than the economic releases are at the moment. So we'll start wrapping things up there. I hope you found the stop thing useful. I do think, just taking, I think it's a common error we all make, that we set stop losses assuming we set them far too tight, and it's incredibly frustrating. Whereas I think if you maybe take a step back, if you normally look at 5-minute charts or 10-minute charts, take a step back and look at an hourly chart, or look at the dailies, to see obvious big levels where you want to put your stops in. That can really help your trading and take away some of the frustration, I think, that we all experience when we get stopped out only to see the market go exactly where we thought it was going to go. So we'll wrap things up there. We'll do it all again next week. You can follow me on Twitter. I try to put interesting chart levels and stuff on Twitter. I'm at Jones the Markets on Twitter. If you have any questions after this, drop me an email, david@tradeafter.com. AUDUSD are probably better known for their social trading, where you can copy other traders. And I've started writing a blog about doing copy trading with a real account with a couple of £1,000 in. And you can read all about that on my website, which is tradeafter.com. audusd.com. But we'll wrap things up there. Thanks for coming along. Hopefully you can make it next week as well, this same time next week, and we'll see where markets are. And until then, I hope you have a good trading week.